Tonight, we look north, to a story of quiet rebellion that has erupted into a full-blown economic shockwave. An unprecedented consumer movement is sweeping across Canada, shaking the foundations of its relationship with its closest ally, the United States. It's a boycott of historic proportions, a national pivot away from American goods that has caught industries and politicians completely off guard. This isn't just a fleeting trend, it's a profound shift in national consciousness. Recent polling reveals a staggering unity among Canadians, a near-universal commitment to buying local. A late February 2025 poll from the Angus Reid Institute delivered a stunning finding. An overwhelming 98% of Canadian respondents confirmed they are actively looking for the Made in Canada label when they shop. This isn't just passive preference, it's active replacement. The same poll found that a combined 85% of Canadians are consciously substituting American products with domestic alternatives. Nearly half, at 48%, are replacing as many U.S. goods as they can possibly find substitutes for, signaling a deep and unwavering commitment to this cause that transcends simple economics. This consumer-led charge has transformed the daily lives and habits of millions. In the 21st century, a revolution needs more than just conviction, it needs technology. The movement has been supercharged by new smartphone applications built to help consumers identify and avoid American-made products. Supply chains or complex product origins are often obscured. These digital tools are indispensable at the point of sale. A simple barcode scan becomes an act of economic patriotism, growing the boycott with each download. Buy Canadian. Is this Canadian? Oh, Scanada. Shop Canadian. Many apps also include directories of Canadian-owned businesses and locally sourced goods. This ecosystem makes participation easy and accessible. It removes guesswork and turns a political statement into a binary aisle choice. The apps show a fusion of consumer activism and tech innovation. The result? A highly informed, mobilized consumer base. Retailers are rethinking procurement. Shelf space for American brands is now a liability. This powerful consumer movement is not operating in a vacuum. It has received a significant and very public endorsement from the highest levels of the Canadian government, transforming a grassroots initiative into a quasi-official national policy. On February 1, 2025, Prime Minister Justin Trudeau delivered a clear and direct message to the nation, calling on Canadians to choose Canadian products and services rather than American ones whenever possible. This was an explicit call to action, lending the full weight of his office to the boycott. The Prime Minister was not alone. Canada's Foreign Minister, Melanie Joly, amplified the message. She suggested Canadians should cancel or avoid planned travel to the United States. The synchronized messaging from Trudeau and Joly left no room for ambiguity. The Canadian government was actively encouraging and supporting the boycott as a tool of foreign policy. This official backing galvanized the Canadian public, reinforcing their sense of purpose and validating their actions, giving the movement moral and political authority. The consequences of this unified Canadian stand are now being felt sharply south of the border, where the economic fallout is becoming impossible to ignore, striking at both retail sales and the once thriving tourism sector. The most recent data from Statistics Canada paints a stark picture of the travel collapse, revealing that Canadian trips to the U.S. have plummeted by a staggering 28.7% compared to the previous year. This is not a minor dip. It is a massive withdrawal of what was once a reliable and lucrative stream of visitors, leaving a tangible void in American tourist economies. According to new estimates from the travel analytics firm Tourism Economics, the United States is currently on track to lose a total of 4 million Canadian visitors this year alone. This precipitous drop translates directly into a staggering $4.3 billion in lost tourism revenue. The broader impact is even more severe, with the World Travel and Tourism Council projecting that the total loss in revenue from all international travelers is expected to cost the U.S. economy $12.5 billion this year. This economic pain is not confined to major tourist hubs. From Plattsburgh, New York to Bellingham, Washington, local businesses are reporting dramatically lower sales as their most loyal customers stay home. Even the most iconic American brands are not immune to this wave of consumer activism. McDonald's and Amazon, once symbols of American commercial dominance, now find themselves in the crosshairs of the Canadian boycott. The unified front in Canada is creating significant operational headaches and reputational damage. Fast food, online shopping. The boycott represents a direct challenge to their market share, and a threat to their long-term growth prospects in the country. Interestingly, these corporations are facing pressure on multiple fronts, not just from Canada. Demand fair taxes, demand an end to price gouging, demand real equality, demand corporate accountability. This domestic turmoil complicates McDonald's ability to respond effectively to the crisis unfolding north of the border. A boycott organized in March had a negligible effect on Amazon's bottom line. The company still managed to post better than expected earnings. But the Canadian boycott is prioritizing local identity and economic patriotism above all else. The sight of a struggling McDonald's or a retreating Amazon in Canada serves as a powerful symbol of the boycott's success. Nowhere has the conflict been more dramatic than in Quebec. After just 5 years of building its presence, Amazon made a shocking announcement. It would be closing all of its warehouses and completely ceasing operations there. The decision, announced on January 22, 2025, sent tremors through the regional economy. This was not a minor downsizing or a strategic consolidation. It was a full-scale retreat from one of Canada's largest markets. The consequences were immediate and devastating for the local workforce. The closure of all 7 of its Quebec warehouses resulted in the direct loss of 1,700 full-time jobs. These were positions that had been hailed as a sign of progress just a few years prior. The sudden disappearance of these jobs left hundreds of families facing uncertainty and ignited a firestorm of local anger. Amazon's abrupt exit did not quell the boycott. It sparked a new, more intense wave of local boycotts specifically targeting the company. As the economic consequences of the Canadian boycott continue to mount, the response from Donald Trump and his administration has shifted from dismissal to outright frustration. The White House is clearly feeling the pressure from the sustained economic campaign. The official sentiment was revealed by Pete Hoekstra, the U.S. ambassador to Canada, who acknowledged the growing friction between the two administrations. He stated that there are reasons why the president and some of his team refer to Canada as being mean and nasty to deal with, directly attributing this view to the effective and widespread Canadian boycotts of U.S. products and travel. This characterization is a significant departure from the traditional rhetoric of friendship and alliance. Rather than expressing overt fury, the White House tone seems to be one of bewildered indignation. They see an ally acting in a way they perceive as aggressive and uncooperative, failing to appreciate the depth of Canadian resolve on this issue. If anything, being labeled mean and nasty by the Trump administration may be worn as a badge of honor by many Canadians participating in the boycott. It serves as confirmation that their actions are having the intended effect and are being taken seriously at the highest levels of U.S. power. We stand at a critical juncture in the history of North American relations, a jagged split, Canada and the United States. The great undefended border between the United States and Canada, long a symbol of peace and seamless partnership, has now become a line of economic conflict. The Canadian boycott, born from national pride and economic self-interest, has fundamentally altered the dynamic between these two nations. The question that hangs heavy in the air: is this a temporary storm or a permanent climate change in their historic alliance? On one hand, the boycott could be a necessary, painful recalibration. By demonstrating their collective power, Canadians may compel a more respectful, equitable approach from Washington. Conversely, intense economic strife could inflict lasting damage. The mean and nasty rhetoric from the Trump administration, coupled with real financial pain, is breeding resentment. Will this confrontation lead to a new understanding and a stronger alliance? Or will it entrench divisions and create a future of sustained hostility? The actions taken in the coming months by governments, corporations, and citizens will determine the outcome. The world is watching. Can these two neighbors find a way to mend their fractured bond? Or is this the beginning of a new, colder North American reality?